What's going on, everyone? Jeff back with another video. What I want to talk about today is I want to walk you step by step how to buy put options using the Webull app. Now, I made a video very similar to this about a month ago. The video I published on how to buy call options on Webull. There is going to be a little bit of difference in this video though, okay? I'm going to basically walk you through some of the same steps. I'm going to show you how to buy put options here on Webull, all the steps you need to take to do so. This one has been very highly requested from multiple people, but that's only going to be about half of the video, okay? The last half of the video, I really want to talk about factors and situations where you should think about buying put options or where you want to at least consider it. And then of course, I'm going to talk about some of the situations when you definitely do not want to trade puts, okay? There's a lot of channels here on YouTube that are aimed around trading, and even there is some channels here that are aimed to trading options right around earnings time, okay? And you can have a lot of success with that if you're extremely lucky. And of course, all stock market channels tell you the same thing. Even me, I'm willing to tell you the same thing. These videos are for education and entertainment purposes only. Is there any channels out there that are actually teaching you situational awareness? When is a good time to start thinking about put options, and when is it just simply gambling? You're gambling with your money. The reason I do want to make that in this video, I have a lot of experience trading stocks, done a lot of good, but I've also made a lot of mistakes, and I have a large pool of experience to pull from. I know sometimes things just don't go like you think they should. Curveballs come at us all the time. The real goal, if you're gonna trade, you want to nail 7 to 8 trades out of 10, maybe 9 out of 10. You want a very high win percentage, as opposed to maybe getting 1 or 2 trades right and messing up, 7 or 8 trades. So we're going to discuss that in the second half of the video. Before we get started though, guys, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. Alright, let's start with a real brief crash course. I want everybody to at least know what they're getting into if and when they do buy put options. What is a put option? It is a contract giving the owner the right but not the obligation to sell or sell short a specified amount of underlying security. Now, that's a bunch of hoopla. If you want me to break that down for you much simpler, this is how put options work. Basically, the way you profit from a put option is the stock price has to go down. That's why you would select a strike price. And let's say we were going to buy puts on Alibaba here at $254 with a $220 strike. Depending on the length of the contract and the amount of time, as it gets closer to the $220 mark, the price of the put options will actually gain value. So it's very similar to shorting a stock. The whole idea here is you want the stock price to go down. That's how you would make money on puts. As opposed to call options, you want the price of the stock to increase. That's how you will make money using calls. And now keep in mind, I do mention this a lot also, buying put options that are in the money are more expensive, but as a stock will drop, you will get gains faster, and you can also sell faster, minimizing some level of risk, in my opinion. Whereas sometimes a strike price might be so low or so incredibly high, it's almost unattainable. My theory on that is buying puts that are already in the money. If you have the stock price going in the direction you want it to go in, you can cover on them a lot faster, therefore making your trades execute a lot faster and getting you closer to your ultimate goal, building your portfolio. Alright, so step number 1 to buying put options here on Webull is opening an account. Now, I will have a link for this pinned down in my comment section. It'll have a couple of things. First thing you're going to see in that pinned comment is a link for Webull, okay? You will open a Webull account, make your initial deposit of $100 or more, and you will get 2 free stocks to do so. You get 1 stock for opening an account, you get a second stock for making an initial deposit of $100 or more. And I think that's actually a really good idea for any beginner in the stock market, is use your own funds and your own money to build cash positions in long-term investing, and perhaps use free stocks to experiment with options trading. That way, if you do get in trouble and you do lose some money, at least you can tell yourself it wasn't your own money. It was your free stock money. And like I said, that's very passive income. Then again, you could just use it as a passive income source. And then the second thing you're going to want to do before you can buy puts on Webull is you have to enable options trading for the Webull app. And I have a video I made specifically for this that's also going to be posted in the comment section. So in the pinned comment, you will find a link to sign up for Webull, and right under that you'll find a video link for how to enable options on Webull. It is absolutely necessary to take both of those steps. And now, since I've published that video, the process to enabling options for Webull has actually become quite a bit easier. I've had quite a few people touch base with me, send me emails, and even comment in my course that the process is getting easier and easier. So I have full faith in the Webull community that they are making this very user friendly to sign up for the options. This video is just kind of a guideline showing you what to do, how to do it, and see it through. Like I said, if you ever get yourself in a situation you don't know what to do, you can always drop a comment and I'll try to help you out, or reach out and send the Webull staff an email, ask them questions. They have a very good support staff and they're willing to help you get your account ready for options trading. Okay, so that is going to be step number 1 and 2. All right, so go ahead and open up your app. Get onto 1 year watch list, and let's look at some stocks that we want to buy puts on. So for this video, guys, I'm going to use Eastman Kodak, ticker symbol KODK. I've actually made a video about that recently. And so what you're going to do, you're just going to click on the stock that you want to buy puts for and pull up your stock quote. Now we have our stock quote pulled up for Eastman Kodak. Let's go down here to the bottom on this little trading bar and select options. Now the first thing you're going to want to do once you have this page pulled up, go directly down to the bottom of this page. As you can see right now, calls are highlighted. Make sure you select puts. Now puts are highlighted and you have all your put options catalog available. Next, let's go up here to the top and select our date of expiration, okay? So you just click on this number up here at the top, pulls up all the different expiration dates, and let's try to aim for about a month and a half into the future. And so we're going to use the September 25th, 2020 put options catalog. Click on that and you can start browsing all of your options for that expiration date. And now you go ahead and shop around, look at all the different options and the prices. Now for this video, we're going to zoom in right here. We're going to use the $8 strike price with the September 25th expiration date. So we've decided on this set of options, and we're going to click on this option quote right here. And again, it's going to pull up another trade menu down at the bottom of the page. From here, all you're going to do is click on trade. Now you have your buy order pull up. So the first thing you're going to want to look at is your strike price and of course your expiration date. Make sure you double check those. You can change your expiration date around if you'd like. Make sure you have the correct one, the one you're willing to settle with, and also your strike price. You can take your strike price up and down here using this toolbar. Like I said, make sure everything is accurate to your likings. All right, now our order type. We're going to use a limit order, and just for fun, let's lower that limit price, and we want to buy in at $2.20, which towards the end of the video you will see $2.20 limit price is actually going to cost $220 to buy your contracts. You can come down here and change the amount of contracts you want, and then select as many or as few contracts as you desire. And then of course our time in force will be day. Now once you have all those details combed out, simply click on buy, and that's going to pull up your final order confirmation. Now I do want to emphasize the importance. Again, Webull is giving you another chance to rake through all your details and make sure everything is accurate and to your liking. So again, and double, triple, even quadruple check everything. Make sure is the set of options you want to buy. As you can see, it's going to cost $220. And when you are done with that, click on confirm. And now once you click confirm, that will go ahead and submit your limit order. Make sure to always use limit orders. That way you're getting the price that you want to pay for this specific set of options. Don't overpay for options just because you want to get in on it. Make sure you're always getting the price you want. Yes, the price of the stock will actually have to go up for this order to fill, but that's a very good thing and a very good technique. And that is pretty much it. Now you're just waiting for the market to open and this set of options to fill. That is how, from start to finish, how you would buy options here using the Webull app. All right, now briefly, let's talk about a couple of situations where you might want to start thinking about buying put options. And so one situation, there's something we can all relate to that happened this year that is considered a macroeconomic phenomena, such as levels of inflation, price levels, economic growth, national income, gross domestic product, changes in employment. Back here in February and March, what did we see? That's when the outbreak of the coronavirus really spread rampant through the United States. And over the next few weeks, all of the major indexes crashed. I would say starting around February 19th, really didn't see a bottom till around March 23rd. So you had about a month's time where the news was really bad, employment was getting cut, and panic and fear were at a very, very high point. If you start to see changes in sentiment and macroeconomics in a very short period of time, you can usually benefit from buying put options against the market. And you wouldn't even necessarily have to pick one specific stock. You could just buy puts against the index funds. Again, I want to emphasize, you want to have real data to put behind that. Don't ever just act on a hunch. Don't ever just say, you know what, I think something bad is going to happen again, therefore that is a good reason to place bets against the market, okay? Like I said, I want to emphasize too, the amount of time is that between February 19th and March 23rd, when the market's seen a real bottom and a real low. Like I said, you had about a month where the market was basically in free fall mode. And so conversely, there's also a lot of opportunities to buy stocks. That's why a lot of people choose not even to play options or to short stocks. They'll just kind of wait for a bottom to set in or somewhere near the bottom, and then they'll start buying stocks heavily. But a change in macroeconomics and a change in data and anticipating those changes would be a good reason to look into purchasing some put options. Now let me give you an example of something I do not think is a good idea at all to be buying put options. I mentioned this at the start of the video, and you will see a lot of people try to popularize this style of options trading, is buying out of the money call or put options. And the reason people are attracted to this is because the premium to get in these options is very, very low. You can buy a set of options maybe for $5 or $10. Like I mentioned at the start of the video though, a lot of the times the price movement is so unrealistic, whether it's to the up or the downside. This video we're talking about the downside. So put options, a company is going to have to go bankrupt, or they're going to have to tank massively on earnings. Something dramatic is going to have to happen, and that's why those options are so cheap. And a lot of times, through my experience, the options I've traded over the years, it's basically like throwing money in the trash. So you always want to try to buy your options close to either in the money or close to being in the money, and definitely have an exit strategy. You know, like I was telling a student the other day, if you can get good at making $5 or $10 extra a week trading, and you can start to build on that, kind of make that a foundation, you have to look at that as a start. You can't just say, I'm either going to get rich or I'm going to go broke. You have to be able to find rhythm and find consistency in your trading. So always try to buy your options in the money or very close to being in the money. Another style of trading I see people lose money on a lot is buying put options before an earnings call. And that kind of leads into my point, is it's actually smarter to buy the options after the earnings call, because you know what they've reported and you know what a company's forward guidance is. As you look at last week's earnings calendar here, many of these companies run up into all-time highs. Some of them drop down to lows. And the truth of it is, numbers and estimates tend to be so very, very close and so very, very marginal. It is going to be hard for any one of us to know specifically that, let's say, this company is going to have either good or bad earnings and have good or bad forward guidance, and then is the stock gonna react the way you want it to, okay? I'll even use the example of NEO last week, where NEO had fantastic earnings, fantastic forward guidance showing real growth in a company, and the stock actually ended up selling off because so much of the growth has already been priced into a stock, okay? So that's one of those situations I really give fair warning. I try to tell students all the time as well. You don't necessarily want to buy options before the earnings call. I always recommend waiting till after the earnings call, so the picture is kind of clear and that initial reaction of the stock has passed by and the direction will become very, very clear. From here on out, this company should grow. They had strong earnings, they have strong forward guidance, and they have strong one-year guidance, and we can continue moving in an upward direction with it, or vice versa. the stock's going to trade down, guidance got lowered, and things aren't looking so rosy for a specific type of company, that would be a good opportunity to buy some puts. But like I said, just going from earnings call to earnings call, trying to guess at it, hope you get it right, you will lose a lot of money trying to play the guessing game, and I basically call that gambling, because even the executives at these companies, some of the highest ranking people that work at these companies, are not going to know what earnings are going to look like till the day they're being reported. So that's all I got for the video though, guys. Make sure to go down to the comment section, share any thoughts and opinions you have with me. I would really enjoy hearing that. Thank you as always for watching the video, and have a great day.